Hey everyone, this is DayTraderRockStar, and this is the high probability watch list for the week of February 17th. February 17th is President's Day, so the markets are closed. It's also the week of the trade show, so for those out there coming to New York, we have a great get-together. I'm looking forward to meet everyone, and more information will go out as that gets close. That's Sunday night, so we already sent out the information on the meetups in place, but if you still need to know and what the deal is, we're having a membership get-together in New York about 8:30 Sunday night, and it's going to be fantastic. So looking forward to meeting a lot of people. So let's just jump into this. We left off last week on the watch list, or actually the market video. We left off with this beautiful candlestick in the market. And, in the review of that video, we talked about how the market has pulled back, and each time it pulled back, and we had one of these major, what we call it, expansion candles, big wide range candles. That was the beginning of an extended rally, or at least a multiple day rally. I was trying to say multi-day rally. So we had that, and I said, well, why not? We're going to get some follow-through. So we got some follow-through, and let's actually take a look at how it looks right now. So you can see where we marked that level off, and now where we are. I mean, tremendous rally this week. And this is not bad. You kind of wanted to expect this. You always, we're always headed on why the market sold off, but this really shows you that this candlestick, this big candlestick that broke down, we were oversold at this level, and typically that oversold level in a trending market here continues to be a buying opportunity. But in this case, there was some news that came out of Europe. There was some foreign exchange news, and currency news, and Chinese news, and everything combined here kind of made a little storm here, and it caused the market to sell off pretty aggressively. And it pulled back down and really kind of just broke down a lot of charts, and that's what happens. That'll happen every so often. We've been in this market and seeing this rally here, basically this bullish market for the last couple years at least. We could go out 3-4 years, but really, just looking back, close memory, for the past last year, and these opportunities come along, and then the market continues to push back up. And the only time we really see the market go into a kind of a funk is on some kind of news that takes the market either by surprise or put some weight on the market, and people get uncertain, uneasy, and you get these pullbacks. And they're mostly, debt ceiling issues, government, political issues, even foreign issues, foreign and geopolitical issues. These things could weigh on the market. Now, this candlestick, in my opinion, was based off of that, and that broke a lot of charts down. Made things a little worried, but as you can see, the return right there really shows you that this was a news event, and in reality, it looks like the market wants to continue what it was doing, and that is consolidating, moving higher, and everything else. But this is important. This balance is very important, because we want to see how strong this market is. And normally you get oversold and overbought levels, and as you get up here, you can see the overbought levels, the embedded stochastics push higher. But this is really the first breakdown that we broke down through a previous low here in a while. And now that we push back up, we want to see if we fail to make the recent, those recent highs. Now the stochastics are already getting overbought. So I threw 2 pivot areas on here. I have that pivot area up here. I'm calling for this trend line here to be an important level to watch. So we're very close to that too. So we're very close to being overbought, very close to be up against this 1, 2, 3 channel, and but we're also very close to taking out the highs of the market. So you got to feel that this market is very strong. That the chair, Janet Yellen, has come on this week with her speech and her testimony, and has really boosted this market's confidence in one way. And it looks like everything's back on track. Not, it still hasn't taken out the highs, and something to watch for. So if we do see a failure here or something up against this trend line, it wouldn't be, it's just good to be to watch this level coming up. But we're doing fantastic on the HPS setups, because we're focused on those great quality names, and those quality names have given us great opportunities this past week. General Mills, Kellogg, down the line, Procter & Gamble, all the way down the line and back up the line. We're going to go over those. We're going to go over new ones. And, man, let's kick it off right now. All right, let's start something up here. One thing I want to talk about is, I did start that hedge in the SPXU up at this level in case we start to fail this level, but very, very, very small. So, and I would definitely want to take that off if we started to take out the highs here. So, not a big risk to the, as a hedge, but I would definitely, want to manage that because this market here is not that far from the highs. It looks great, and the stocks you're going to see that I'm going to run through right now are showing very bullish tendencies, and these underline the overall averages and the indexes, and this could actually mean great things for the market going forward. I wouldn't worry about so much, or better yet, try not to miss the moves. Try not to miss the moves by having a strong opinion on why the market's moving up or moving down. I think it's very obvious the market is very strong. This last move seems to be a stronger than average bounce move. If we're looking at a kind of a pullback bounce and a failure and a continuation trend down, this is a little strong on that type of trend. So I'm kind of leaning that we're going to actually take out the highs and move higher. My bias is now, because of the strength today, we have a trend line. I think down the road we can actually see that. Still have a little hedge on. We're short Macy's. I think Macy's is a good short. And the setups that you're going to see, coming up over the next couple of weeks are just going to be golden like they have been. So that's really just to focus on good quality trades and just continue to make money. First thing we want to do is look back at what trades we took this week and kind of stay true to the methodology because it's good to reinforce what works and what doesn't work. In this case, you can look at Procter & Gamble, which was one of the best bets of this week, and just a key setup. And if you look at a couple of the different things here, that tight channel line, remember this area here is based off of some news that broke us down, and we broke down out of some major channels, but because of the underlying pivot areas and this nice tight channel, we're able to kind of identify another good level, and we kind of wanted to wait for that candlestick to show us that real completion of, or just that real good extra signal to let us go long here, and that's what happened. One of these days we had a nice reversal candle, a nice hammer play out. The next day was choppy, another day choppy, then it ramped up. But that one candlestick that really played out really was the key. I think that was a key that we were looking for in a lot of stocks, and I think it continues to be a very good strategy to use in a pullback. So if you do recognize a good company, it's in a nice pullback, there might be, look, if you want to add just an extra indicator, look for that, one of those reversal candles that we highlight on this on the HPS indicators. So there's a few of them, and those are listed on the site. If you don't have them, just get in touch with me and I'll give you those important candles to look for. So Procter & Gamble, again, the trade is off. We took the trade off the trend line. We sold it into the upper trend line, and it was just a perfect textbook setup. Now it's pulled back a little, and I still like this as a breakout further back up to the 200 period moving average. We talked about a strategy that we like. It's called a pushback to the 200, a retracement, and this is exactly what that did. So this is a perfect example of a breakdown through the 200 and looking for that pushback to the 200, and then that pullback. So that's the reactionary. That's just a great technique, especially with a name like Procter & Gamble or anything like that. IBM, Philip Morris, a big type of blue chip type of stock here that breaks down through that 200. Just based off of some outside influence that moves the markets, is a great trade and opportunity to push back up to that 200 period moving average. And you saw that this week. We took advantage of that across the board. So Procter & Gamble, again, still very bullish on this. I think you're going to actually see it move back up, which is a nice setup. General Mills, GIS. This was called a coiled stochastic channel breakout. My favorite setup of the week, and of course, right off the lower trend line, we talked about the importance of identifying a unique pivot versus just an average turn of the market. But when I call unique pivot areas where it's usually a candlestick spike down, leaves a candle tail there or shadow, and here you had one, Here was just a good pivot area. Here, of course, the pivot area. This is the pivot area. This is really where the market makes a significant move, directional move. So once you have two of these plus this one, the 1, 2, 3 pattern, you got a coiled up stochastic. You have the lower trend line. This was just the best opportunity out there. That's why it was the best. And look at the return. I mean, I was so comfortable and confident on that. It moved a little higher, but it still looks actually quite good. But that trade now is out of the HPS zone for a buy, and that's what I like on this type of quality name. So that was another trade of the past week. Smuckers. This is actually going to be back on the list this week, and it's because it's starting to coil up better. We have a tight pattern. It just wasn't getting a big bounce for me. I think we nailed the trend line. It was just consolidating sideways, so I took it off. And, I made some money on it, but it definitely could have made a lot more if I held it into today. And I actually think this real tight channel that we're in right now is going to break out of here, and this is what we're going to call a... I love when we have a tight channel inside of a bigger channel. I love when we have a coil stochastic. This is going to break out with this, and it's just game on. If you look at the pivots here, you have an important pivot area here. You have an important pivot area here. And of course, here that's your 1, 2, 3 pattern. Came down, actually put a nice little candle in there, a hammer, and it was just again beautiful trade. Now it's pushing up against this channel line, back up to the 20. Look where that 200 is. Look where the downward channel. Look at the coil stochastic. Everything here is screaming buy. Everything is screaming buy. I hate chasing things like this that has that pop. I love to be part of every little perfect trade, but in this case, we might have to chase this a little just to get a position. Here was Cinemark, and Cinemark here again got a little flush with the overall market. It's in reverse, pushed higher, took it off. Not my favorite. Whenever you see a channel breakdown, which we did, try to establish a new area where you could get in. We started get embedded to the downside. It was very weak. This is really the first bounce back up towards the 200 period moving average. I mean, the trade was good, but I'm probably not going to look at that one again. We'll pass on that one. We'll bring it right down to the next one up is the Target. Target again was another good trade. We picked it up at 56.66 on this pullback, and we took it off a little bit higher, 57.25. Yeah, and I still expect it to get up to that 58 level. We started getting a little overextended on the 60, so took that off. It did pull back a little. It's chopping around now. Still think we have some upside on this one too, even though there was some of this, again, lingering bad news on the big hack that happened with Target. Here we have Nike. Nike was a kind of a momentum play. I held this one, bought it before it closed, sold it the next day as it popped higher. It was just showing good strength. I liked it. Got in on the 11th, got out on the 12th on the gap up. Still looking very strong. Take a look at the daily. This I couldn't qualify this as an HPS setup. It was just basically a kind of a possible scalp, but just an overnight hold and taking it off into profits because it was a very strong stock. I love the pullback. It was right to the 200 period moving average. But getting up to this level, why did I chase it on the 60? The daily was overbought to 60 because we started getting embedded on the 60. So when I started to see that, I think we're crossing back up here. It just looks strong. Once I start to see that 60 kind of chime up there, there's a good shot that it continues to push higher. And that's exactly what happened with this. That gapped up, pulled back, then pushed up a little higher. It still looks like it has more upside on it. But not a pure HPS setup until we get a rotation back down and maybe some kind of setup. I do think this one's definitely going higher. I'd rather be part of Nike than, and then a lot of other stocks. But maybe we get some kind of retracement. We get a rotation back here. This will set up as a perfect trading opportunity, but that has to be seen first. We have to build this chart out. We have to get a couple more pivots really defined here. It hasn't defined itself. But great trade this week anyway. Great trade. And this CSX here came right up against our resistance area. We took profits into that 27.50 zone. And you can see we're having a little problem with it. We're starting to get overbought. Is this a short into this? Is this a high probability short? Well, the indicators might point to that. But the type of the stock here and the opportunity, the trend, it's very hard to short a strong, possibly, stock that's been making new highs and just flagging out. You want to, pick your battles, and this might not be the battle to go short on this zone. I actually think we're going to actually continue to grind back up. So I'm very much considering getting back in on this one, some common. I have some calls still for next week, but I really do like the opportunity here on CSX to break back into this gap and kind of grind back up. It's not a big reward to get back up to the highs. We're talking, it's not a fast mover, but I definitely is one of the ones I like for grind back up, but not on the high on the list. You're going to see a lot more better ones than that coming up. CSX, CVC. We took CVC off finally. The Time Warner merger gapped up today. Took it off. Glad to be rid of it. CVC, Cablevision, and Solar City. We scalped that one today, and this was a beautiful, beautiful flag, and it was a nice trade. Just a good trade. Got two and a quarter points. It ended up moving up a little bit higher. This is a textbook flag. I probably expect this one to continue to move higher. If it gives us another opportunity, we'll be in it. Right now, we got in. We took it off into that little area resistance, but also made a point of saying this could be a breakout zone too. So, I wasn't going to look back, take profits. I wasn't going to look back. Now you can see the stochastics here on the 60 are embedding themselves. That's very strong. Tomorrow's Friday. We still have another trading day in front of us. If you get any type of pullback in here, I bet you we see that just a little pullback into the candle and then a continuation. Unless there's some kind of news that we get a gap up and a continued pop, I would say maybe just a little pullback and then boom. So maybe we're taking no scalp on this tomorrow on SCTY, Solar City. Everything looks good on this, Solar City. I know Rock and Roll the Mailman has this one too, so he'll be happy about this. And here was a great one today, Cabela's. You know how much we love Cabela. So seeing Cabela come out with its earnings and missing and knowing it was going to gap down, did a fast little underlying trend line. We came right down to that level. Also, a recent area of support really caused it X marks the spot zone, that lower trend line. The gap down made this a fantastic level. We scalped it twice today. We made some good money on it. Very, very happy with, and a lot of the members got in on this one too, which I'm very happy about. Felt really good about that. Look at how we drew that trend line in earlier today. Watch that price come right down to that level. Start picking it up. Add to it a little. Get to run. Take it off. Wait for a little pullback. Right here. Got in. Made a nice run. Took profits. Pulled back. Started running again. Then got in a little bit more. Ran it up a little. Took profits again. And, that's enough for me on this one. It's just a matter of this one setting back up, but it gave us some great opportunities off of this trend line, and that usually happens on the first touch, and just fantastic. I hope we get other situations like that. Tomorrow's Friday. There's earnings out today, so that means there's going to be some stocks out there that are that will be breaking up or down tomorrow, so maybe we can take advantage of that. And let's just start going through some other ones right now. One other chart I put out last week, and I want to show it to you, is this VIX volatility index chart compared to the S&P cash. And this was a really great setup based on the VIX. The VIX had spiked up last week to 20 in that 21 range, and it's done so before in September, and then in June, and back in December, and back on. And each one of these times could be identified by a market pullback, and that's represented by this red line, the S&P cash chart. I mean, a red line. You can see anytime the volatility rises, the fear in the market rises, and that usually corresponds with the market pulling back. There's fear in the market, money's coming out of the market, volatility pops, and we had this, just kind of a scenario that's played out over and over again. So we looked at, I just happened to bring it up. I said, well, this looks interesting. Let's compare what this is going, what's going on there. The stochastic indicator is based off of the volatility chart. I say that momentum is based off, you could put a momentum oscillator on a lot of different things. Anything that moves, of course, has momentum. So you could actually measure that. And in this case, you could actually see it results in, you know, a nice overbought level on momentum. Back here it did, back here it did, and then actually each time it got overbought, you know, the momentum shifted back down, we sold off. So this is what we were looking at last week when I sent this out, you know, looking for that market to kind of pop out of the correction, the volatility to pull back. Now this is the volatility chart now, and you can see we really did pull back. I don't have the overlay back over it, but you get the picture. Now all of a sudden we're back into oversold levels on the volatility. It's really pulled back pretty aggressively. So something to pay attention to, you know. We actually did hold off the recent lows. We got oversold. So that could even add to something too. Let's get back to some stocks. All right, in this next segment, we're going to go over the HPS setups that have triggered this week. And this is off the HPS site. And then for those out there who are getting part of this video is usually split into two portions. The first portion is a review, and there's some good setups and education. Second portion is the HPS watch list, the active watch list that goes out to members of Day Trading Radio. So you get to see a little bit of what you get there. So this is called the this is how we do it. We send out the alerts based on the HPS methodology. That is, again, based on the multiple 5 indicator setups. And each one of the levels, well, we're going to show you some other examples. But in this case, this was just an updated chart. And it gives you a lot of information on it. It talks about, this is, again, goes out with video format. So we talk about the chart in the video like I'm doing right now. Talk about the entry levels, the exit levels, and the stop levels. And this one was the best bet of last week. Also, that's a really good one, is because I always announce the best bet on the watch list for the week coming up. And I've been starting to do that for the day. So each day before 10 o'clock, I'm trying to get out the best bet of the day. And now before 10 o'clock. And that's been working out good, because today was Con Edison. Yesterday was another one. We just ripped higher, and there was a lot this week. I've been really nailing those best bets of the day. We still have one more day left on a Friday, so you're getting this video out again a little bit early. So maybe we even get the best bet of the week out and see how that reacts tomorrow. But all right. Canadian National Railway, CNI hit this week. And again, you can see the recognizable pattern. Really good pivot areas on here. Really represents this underlying trend line. Whenever you have both sides of the channel is represented by a good pivot area. So this lower channel line where we have the thing, we kind of put a big box in here. But basically, a lot of these things are not set up. We want to buy when all the indicators are lined up properly, and that includes the stochastics being. If you're going to be buying off the lower trend line, you really want to have a more of an oversold level going into an starting to turn back up, buying momentum coming back, instead of seeing that selling momentum bringing us down there. So, it could come down to that trend line, all around that trend line. The alert will get issued. You'll get that on your devices, and you could analyze the trade yourself. But you will see my alerts also go out if I take that trade. You could click on this little arrow, and it just fast forwards the chart through the week. And you can see we came right down to that trend line, triggered our buy entry zone, stayed above the stop, and then, as you can see, we kind of rocketed right back up through that trend line, right into our profit zone, which, you really extend that all the way over, just a band. And that trade is really a finished trade. But you can see the concept here. When you have that recognizable pattern, you would really want to buy it off that lower trend line. And to be alerted to you is golden. You don't want to miss a quality name on a great level. So let's take a look at the next one. All right, here's a great example of just a standard Procter & Gamble, nice pullback. I love the candlestick here. That's what we concentrated on. The alert was issued in the room during that thing. The buy zone came into play, and you can see how it pushed right up and triggered our profit zone. We took profits into that, and you can see it actually pulled back. So you've gotten an email for the buy zone being hit, then you got an email for the profit being hit. The trade is over, and we'll wait for that next big setup. So this will be archived on the site. You can actually look back and see all the HPS setups on the site. If they worked out, if they stopped, or if they hit their target. All of them are accounted for. All of them are archived there on the site. So you'll enjoy that. Now this is one that we've been trading. You know, I like the the IBM trade out of this wedge pattern, the divergence wedge. We talked about everything on how to build this chart out. We've traded this thing. It pulled back and it started pulling back right back down to this this little area of interest. But instead, I put a buy zone down here as a triple bottom, which lots of times we felt that market being a little weak. You know, there was something, so I figured that a lot of these things could break down. If they did break down, I'd really want to be part of this one on the triple bottom. I didn't end up taking this trade, but the alerts went out as normal, and you could see how that came right into our buy zone and bounced right back up into the profit zone this week. It was just a textbook trade off a triple bottom. You know, it's just I love those type of setups. Now, IBM at this point, you know, is kind of extended. It could go either way. We'll wait for the next HPS setup. Good HPS setups, you know, have to have 3 of the 5 indicators lining up. And there's so much information on Day Trading Radio about the methodology and the whole strategy that I'm not going to go into it every week on the video. I'm not going to go into it again, but you can see it had a great support line. We got oversold on the stochastics. We had a recognizable pattern. And there was some nice outside day candlesticks. This really had 4 of the 5 indicators lining up right in our buy zone. And from that point on, you could see a beautiful pattern. And again, this will continue to set up. The next time it sets up, we'll do the same thing. Now, when I do my research, I do all kinds of scans. It takes me a good 12 hours to get through this watch list, believe it or not. It's a long time. I started in the morning. I get done with it late at night after scanning through hundreds, probably maybe 500 to 800 stocks. And I just do that. It's just something I've always done. But really, you know, you have to have yourself a good focused list of stocks. Don't get so extended you're looking at crap. You want to just have, and that's what I'm actually working on for you. I have what's called the HPS 40, but I don't keep it up to date as much as I should. And these are 40 quality stocks that I pull from. You know, it's something that you can easily track. And when you identify a great trading stock, be it IBM, be it something else, you know, all you have to do is continue to scan it when it comes down to that, you know, recognizable HPS. You know, all you have to do is put that stock into the formula, that flow chart. It'll spit it out. Hey, does this have this going for it? Does it have this going for it? Check, check, check. It's a 3 indicator setup. You know, it's very obvious to see the buy or get the alert, and, you know, the trade is on. In some cases, like Annie's, it's not a stock that I typically would trade. You know, but it does have that real recognizable pattern. So I want to put it on the watch list for you, and give you those zones. Again, these zones are here to let you know that that price is pushing down to that level. You're going to get the alert. It doesn't mean I'm going to take every trade. Like I don't take trades in Bunny or Annie's. I don't trade that one that much. I'd rather be in something I knew a little bit better. But it was such a good channel, we marked it off. And you could see we actually came down, popped, and then earnings came out. It's funny how this earnings came out right at the trend line. Earnings came out and it gapped it down, and it actually came down and triggered a stop. So I wanted to show you that they do stop out. So you happen to be in it and you got that email, you can actually go back, see what it is. But now if you look at where it is right now, that underlying trend line, look at the big bounce it had today off that trend line. If we actually, you know, took in consideration looking at this stock at this point and saying, wow, I would buy it down here, and to put the alert, and the alert went out today, it would have been a golden alert. You know, take a look at that. Annie's on this one. Alright, B and NY. And you know, this is a little, we kind of flushed through it. But you could see how that pushed right up against that level, gapped right down to that level, it bounced off it. This other chart is a little better, I think. Well, what was I looking at here? The high probability setup zone on this was a little bit more exact on the HPS charts. Now the HPS charts are what they're called TradingView, TradingView.com. Great charting platform. I share a lot of my charts on that. So if you go to TradingView.com and you use their charts, you know, you can follow people. It's like StockTwits and stuff, like you follow their charts and stuff. Make sure you search for DayTraderRockStar so you can get on that. You get those alerts. They're not the same alerts that I send out for HPS sites. None of the active HPSs are on there. Only the closed out ones we kind of push out there for education. But still, they're good to follow those, and you can print those out. Let's see. That's tradingview.com. Tradingview.com. Great little charting sites. It's free, or you could get you could get one of their premium packages. It's all good. All right, now you have Sam Adams, Boston Beer Company. Again, what I call a 1-2-3 pattern. Especially when you have a trend that breaks down. Usually take that first breakdown at low and that high. Look for that next pivot area to come in. In this case, we're going to call it this one. And we just draw this parallel line and it comes down to that level. So we watch that level for a trade. Click on this. You could actually see it took its own sweet time to get down to that level. It came right down to that level. And then boom, off to the races. So it really was a key level to get into. If you got the alert and made some money, congratulations. Still looks fantastic as a larger flag and a large uptrend. So we'll probably focus on this one a little bit more during the members part of this video. Alright, to close out the first half of this video, I'm just going to take a look at one of the research techniques I use when I do some of my scans. And usually at the end of a week, normally I do this on a Friday, but it's being done on a Thursday, but I'm going to go through it anyway. I'll take a look. I'll go to finviz.com, which is a good financial website. It has great charts. It's very good. It's there's so much to go on here. There's screeners, there's maps, there's stuff. But we're going to talk about one section I like to call. You just move over to the right here. You'll see that market map here, the S&P market map. And I'm going to click on that. It's going to make it bigger. I want to show you exactly what we're looking at here. So basically, this is the S&P 500 stocks in the S&P index. They're broken down by their sector and their subsectors: technology, service, base materials. And this is a daily, read of what was up and what was down. And there's a key on the bottom which basically tells you if it's green, bright green, it's up 3% plus. Bright red is down 3% plus. Black is pretty much neutral. The brighter the green, more neutral colors, it's more neutral. The more red, or brighter the blood red, it's more blood red, and the brighter the green is better. Basically. So what I like to do at the end of the week is I'm going to just look at this for a second. Let me move everything up. Get a better view of it. Go over here to the performance. It says 1 day performance. That's the 1 day performance. I go to the 1 week performance, start things out, and then I'll use the 1 month performance. In some cases, I'll even use the 3 months. But the 1 week performance kind of gives us an overview of what the market has been doing this week and what has been strong and maybe what has been weak. And you can see most everything very strong with this market rally. Technology, very bright green. Basic materials, darker green. Spattering of red here, some stocks. But what I'm looking for is kind of a group of stocks that have sold off. Kind of a sector rotation or money flowing out of a certain sector. In this case, not seeing too much on the 5-day scan. Maybe down here in the healthcare section. So we're going to just go down here in the healthcare section. You can see the healthcare plans seem to be. So this is something that would catch my eye, and then I would start to look at those charts. And in this case, you just click on the. You can actually click on the chart, and it would actually come up. You can see the nice pullback here, Aetna. So it tells me, all right, nice pullback. You can actually go underneath here and take a look at some other stocks. You could healthcare plans. That's what we want. And then in reality now, forget about the ad. In reality now, you're looking at a kind of a list of their healthcare plans. And what I'm going to do is just click on charts. Well, first of all, I like to go to market cap and click on the market cap tab. Highest market cap, the lowest market cap, and then I'll click on charts and just kind of get an overview of some of the charts that are setting up. And you can see the UNH has pulled back nicely, WLP, Aetna pulled back, CI. These are the ones that are all grouped up on the S&P, and it's showing nice pullback. So hey, this could be something that we could be trading for a little bounce. So then I just start to do some research on each one of these, take a look at these a little bit closer. I'm going to do that right now. Starting off at looking at UNH, United Healthcare, you can see a nice pullback holding that 200 period moving average. Embedded choppiness on the stochastics here. So this looks pretty good. I'm going to continue. I have it on my list to watch. It's nothing that is jumping out at me. I don't have any really good pivot areas to really work off of. We have the top pivot area. We have this one. No real good other than a real tight channel line. Probably you can see a little bit better on the 60-minute chart, and you can see the 60 is a little extended here too, and it does give you those 60-minute candles. Those 60-minute moves. A little move here, a little move there, down, up, down, but basically moving down. So it's not 100% in my in my zone right now. But I wanted to look at these to give you an example of why they all start to look together. And this one, Cigna Corp, an earnings probably miss or guidance, something that caused this one to drop. This is might be actually what I call a 5 to 7 day pullback. You wait 5 to 7 days and you start to look for that push back up. It's just getting oversold. That's what takes that. It gives us enough time to get oversold and get to selling out of here. Who knows? Again, not going to make a call on that. WellPoint is another one. You can see it's definitely choppy and a nice pullback. Not really moving this week. And Humana also kind of just hanging out. So I wanted to show you those. Nothing here catching my attention. So we're going to pass on those for now. All right. Well, I'm going to wrap up the first part of this video and send this out and start the HPS new watch list. And actually, we could qualify it for tomorrow, Friday, too. So if you're interested in getting more information on that watch list, come to DayTradingRadio.com. Check it out. And we'll see everyone in the markets tomorrow. It's always good to listen in. I'll be broadcasting live Friday. Normally I do not do that, but we switched things up today on Thursday, Friday. So I'll be broadcasting live tomorrow and looking forward to it. So let me get working on the watch list, and I'll talk to everyone tomorrow.